Disappointed?
Good morning, Samira. Well, not disappointed. I would have probably imagined slightly better numbers on the GRM side. We were expecting somewhere around 11.2 to 11.3 barrels dollar per barrel kind of GRM, which has come a little lower compared to what I think was the expectation. And our primarily expectation was largely because of the ability of the company to buy the crude of Basra crude from Iraq at a cheaper rate compared to Dubai Fateh crude. So from that point of view, I think we were expecting to keep better numbers on the GRM side, but it doesn't matter because I think in this quarter it was a little challenging also for them. One of the cracker unit was down for maintenance, and at the same time they had an incident in the cracker unit as well. So obviously, I think it could be understood. Not disappointed, but well, I think it could have been better. Good part is that the GRM, the refining capacity is going to be completing the expansion, and probably in the first quarter of the financial year 17-18, we should be seeing it going into the commercial production. So certainly, I think that is going to look well for the company because from 66 million tons, the refinery is now being expanded to 100 million tons, and the petrochemical business has already completed the expansion largely. So both put together holds the potential to bring the profits of the company up by at least 50% from current levels. From these two businesses.
What are you expecting in the petchem business going on? I mean, this has sprung a surprise. Management has not minced their words. They've said demonetization hasn't impacted business at all. So one, what did you make of that part of the business? And going ahead as well, can we expect strong performance coming in from this side of the business?
Well, the answer should be yes. I think two reasons. One, in this particular quarter, when the domestic market ran little slow because of the demonetization and offtake related issues, they ended up pushing their exports well, I think, in the petchem business. I think so that ended up giving them some amount of, I would say, greater leeway as far as I think the growth in this quarter is concerned. Though growth could have been much higher had there been an industrial job situation. But I think that demonetization is a quarterly impact, I think, which is now over. And in subsequent quarters, we are likely to see the better performance coming in. The demand which got postponed is now basically materialized, which is what we can talk to, I think, most of the processors and they confirm it. So I believe that in this quarter, fourth quarter, we should be seeing higher production coming in from the petchem business, and that should normalize the situation for them.
Within financing costs in the quarter has jumped about 47% to about 930 crores. They've said that they aren't adding any more finance cost for, of course, their core business going ahead. But, I mean, is this going to be a dent? Because this time around, other income gave them the support, so they managed to do okay in terms of profitability. I'm not sure whether 30% plus kind of other income growth is even sustainable going ahead.
So, I think when you run the treasury operations, you obviously have a situation in particular period wherein you end up booking profits and you make the best out of that particular portfolio that you have. Reliance, for one, has been enjoying, I think, for a long period of time, significant amount of the treasury operations, which probably, I think, earning a larger spread. On one side, their borrowing cost remains, I think, lower, and the spread is somewhere around 6% between the borrowing cost and the earning that they make from the treasury portfolio. So, I think this kind of situation should be seen as normal on a larger size of the portfolio that they carry.
Deven, what about the fact that they've avoided saying anything about Jio this time around? No clear commentary coming in. Do you think the future growth or the future positive triggers will come in from the fact, or of course, when their telecom business turns around? So I guess the pressure builds up further on that side of the business.
In the analyst meet, I think some commentary came up, and also I think from the statements of Alok Agarwal, 7.2 crores customers are added, I think, till December 16, and which promises that the company by March 2017 should be having on the books 10 crore customers, and probably I think the billing program should start from the April onwards. And my reading says that given the kind of a population list that they have created now, so I think in the 17-18 financial year, one could expect the number of customers going up to 20 crores from 10 crores as of March 17. So obviously, I think this is going to be a big game plan because Bharti, for one, has taken so many years to reach to 27-30 crore customers. And this company in 2 years' time or 1.5 years' time, if it manages to get 20 crore customers, probably I think one should be seeing a larger valuation unlocking happening to Jio in times to come.
Right. Deven, couple of quick questions. What is your overall verdict then? Because Petchem is obviously much smaller than refining is the big business. And for the last 3 to 4 quarters, refining was doing remarkably much better. Every quarter they were somehow coming out with GRM numbers which we thought were, is that coming from? So what is the overall verdict on those numbers? Slight disappointment, I agree, but give me some more details on that. And also, the stock is at a 52-week high. It's off about 1.5% yesterday. Big knock expected on RIL in opening trade today?
Well, I think some part of the correction may be justified in the market, but that's okay. Because with the refining and the petrochemical business is the two mainstay of the company as of now. Both of them likely to contribute, I think, more than 50% to the current profits, I think, in first full year of working, which is going to be somewhere starting from the middle of 17-18 financial year to, I think, the next 12 months. I guess 50% higher profit growth from the current base is something which one should be looking out for, and I'm sure I think the market is watching very keenly because the capex program is now over. So that is one part of it that I think one could possibly look forward favorably. Second thing is the Jio business getting to commercial production, commercial billing cycle, which means that today they have acquired the 10 crore customers, say example, I think by March 17, which could expand by another 10 crores when they start offering even the internet services to people, I think, at the lower end, to the homes and the offices. And also, I think the mobile segment of customers with a larger amount of corporate connections coming into their fold going forward. I think this company could possibly turn out around 50,000-60,000 crores worth of revenue in 12 to 18 months' time from this business alone, and which could end up giving them a profit of around 18 to 20,000 crores. So which is going to be a big share unfolding going forward. The market is aware about this, and probably I think as the cycle gets over, capex cycle gets over,
right,
one could look at this particular situation more favorably.
Right. Deven, very quickly, a yes or no question. Would you buy RIL at the current price, 1,076? Is it a buy?
In a deep packing to 1,040, 1,020, if it comes down to, that would be the best time to buy.
Right, thanks, Deven, for that. And it's India that's all finally set to roll out the GST from July 1st, 3 months behind the original April 1st schedule. Even as the sentence